welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at the charts that are showing us that we are now at the beginning of the parabolic phase, which could last between 12 months and 24 months. And these are the charts that predicted the bottom of the bear market absolutely accurately in 2022. We're also going to be having a look at the 60-day cycle to tell us exactly where we are in the cycles and where we're heading in the next few weeks and months. And I'll also have a look at where we are with the second target that we set at the beginning of 2023, and that's by looking at the pi cycle, which will give us a clue as to where the current price action could possibly go in the next few weeks. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to start off with the pi cycle. Now, the pi cycle was our second target for Bitcoin to hit before the halving this April. And this was based on exactly what happened before each of the previous three halvings. So if you look at the first halving here, back in 2012, we can see that the red line here, the 350 simple moving average, hit the red line and went above it before the halving here. And in the second halving back in 2016, once again the red line and the price came right up to it, just protruding a little bit above it before the halving. And in the last halving back in 2020, once again the price came and hit the red line. So we can see that in each of the previous halvings we hit the red line, the 350 simple moving average, before the halving here. And currently, with the current price action, it didn't seem possible only a few weeks ago. But now, with the unprecedented price action here, we've got the halving in about 8 weeks' time, and we are very close at 63,000 where the pi cycle is. And the question is, can we hit this price? Certainly it's a target now, and this pi cycle was our second target that we'd set all the way back here at the end of 2022 and at the beginning of 2023. And that was all based on the previous halvings and the facts that we saw in the charts there to target the pi cycle. And the first target that we set over here was the RSI MTF line. And once again, that was based on what had happened previously. And that was at 40,000. So those people who think that the charts don't work have to look at the facts in the charts and know that they do repeat themselves over and over again. Even when it looks at these points that the market is going to do something completely different, it goes and does exactly what it's done in the past. So here we are, the second target at 63,000. We're only 13,000 away. Please remember, this is not a prediction before somebody says that, oh, you didn't hit it and you said it was going to hit. Can I please remind people that I don't make any predictions here. I set targets based on what the charts say. I don't have a crystal ball. I don't even know what I'm going to have for lunch. I'm just looking at the charts and projecting a price. If it doesn't hit, that means that out of the 4 halvings, we've hit the pi cycle 3 times. It means that the next time there is a 75% probability that the price action will hit the red line in the next halving in 2028. So always keep a neutral, fluid and flexible approach so that when things change, you can change with it and not get stubborn into a particular narrative. Okay, so we're going to move on exactly what the charts are saying in terms of where we are in this current bull market. And these are the charts we're going to show which clearly signal we are at the beginning of the parabolic move for the next 12, possibly 24 months. Now I know the parabolic move comes right at the end, but considering the demand created by the ETFs, we may well have brought that parabolic move much closer in terms of the time period. So I'm going to show you a few of the indicators that I used during 2022, the bottom of the bear market. And if you've been with me since then, you will know that I did a series of videos that showed many indicators which were telling us that the bottom of the market was actually in. And based on that, we created our portfolio, which has been running since the end of 2022 based on these indicators. So they have been incredibly accurate. The first one I'm going to show is this blue line crossing the white line. The blue line is the 30 exponential moving average on the 4-day chart, and the white line is the 200 simple moving average. And we can see that on the day this actually crossed over here, this was actually the bottom. Then you can see that the blue line comes back and crosses the white line. And as soon as the blue line crosses back over the white line, if we zoom out, you can see that once it crosses over, this is the beginning of the parabolic move towards the top of the bull market here. And in the second cycle, exactly the same thing happened one more time. We bottomed out here. This was the exact bottom at this point. Then the blue line crossed back above the white line, and you can see that this was a parabolic move back in 2019. So despite what happened over here, the blue line provided support all the way to the top of the bull market. And in this current market, once again, we used the blue line crossing below the white line at exactly the lowest point there. Even though we got a second bottom here, technically this was the bottom at 17,000. And if you've been watching my videos, you'll know that I started accumulating and put 75% of my funds at exactly this point here, based on this and the other indicators that I'm going to show you. And these are the same indicators we will be using in the next bear market to predict these bottoms one more time, because they have never failed so far. So what is it doing now? So as you can see, the blue line has crossed over the white line one more time here. And as you can see, the blue line is separating from the white line. So we are now at the start of another parabolic move to the upside. How far that goes, only time will tell. But certainly this chart is telling us that we are at the start of another big move to the upside over the next 12, possibly 24 months. Moving on to the second set of indicators that we used to identify and target the bottom of the bear market was the 21 simple moving average on the weekly chart, the yellow line, and the 100 simple moving average on the weekly chart, the red line. And as you can see, once again, the 21 crossing below the 100 marked the bottom of the bear market back in 2015. And once it crossed over, you can see that was the start of this parabolic move. And at the end of 2018, once again, the 21 crossed below the 100, created the bottom. And once we crossed back up above there one more time, we were back in the parabolic move to 64,000. And here we are one more time. Back in June 2022, we used this set of indicators to tell us exactly where the bottom was. So once again, the yellow line has crossed above the red line, and we can see that we are now at the beginning of the next phase of the parabolic move. Normally, as we know from the previous cycles, the parabolic move comes around about 6 to 10 months before the end of the bull market. But these moves are quite unprecedented, and it may well be that this cycle will end in 2024 rather than the expected 2025. And the sensible thing would be to actually prepare for this now, because otherwise people are going to get shaken out by these moves here. So there you have it. These are two of the 4 or 5 indicators that I used in 2022 to get the bottom of these markets and to create our portfolio that we run on the Bitcoin Miners member section here. And I'll go through that a little bit later. But what I want to do now is to go on to the 60-day cycle to tell us exactly what's happening now and what it's predicting over the next few weeks and months. Just a quick overview of the cycles. We can see with the number of days for the ends of the cycles and the beginning of the next one, we've had 45-day cycles, 52-day cycles, even 70-day cycles. And currently, with the move that we've got here, confirms that the cycle ended on day 43. So we're now going to proceed with that in mind. This is the previous cycle where it started back on the 11th of December. We ended up with a failed cycle here because it ended up being lower than the start of the cycle at this point. We had 2 fake outs, one at the top above the 45 and one at the bottom below the 40. And this is the way the market tries to shake people in and out here. So people will FOMO in at this breakout here, and those people will be carrying their losses down to this point. And then people here will lose their positions thinking it's going to go lower, but then it goes higher instead. So always be aware of these market shenanigans that go on time and time again. So this cycle that started back here should really have bottomed out at this point around about the 9th or 10th of February. But this move here above the 45 has meant that the previous low at this point, which we pointed out at the time, that with this long wick, it may well be a tentative bottom for this new cycle. And this is now being confirmed by this breakout above the 45. So what we have to do as neutral and fluid and flexible investors on this channel, we have to let the price action dictate our thought process. So we now have to move this cycle line back to this point here. The white line is now the halfway midpoint at 30 days. and the new cycle end should be here. And the reason why these cycles are very important to understand as a framework for finding out what Bitcoin wants to do, it means that going into the midpoint of a cycle, this is the rising portion of it. So we should see further action to break the 49,000, which we have already done here at the current price of 50,000. So we've gone past that point. But once we broke here, as I mentioned in the member section, that if we break this point here, then this is the bottom. And then this would tell us that we're going to be going into the mid-cycle at a much higher price and breaking the 49 with a higher probability. And this is exactly what's happened now. So what the 60-day cycle is saying is that we should now have a big run towards the midpoint. That can be anywhere, 54, 55, even 52, 53, and then make a midpoint low as in terms of a small correction, and then go much higher, breaking the higher point before the midpoint and creating a newer high after the midpoint. And that gives you the right translated cycle. And then how far this will go, we don't know. But before the end of this cycle now, which is going to be around 23rd of March, we should expect some sort of a correction at this point. And that would probably be back down to this 49 level here. That would make sense for the start of the new cycle going forward and into the halving. So this is what the cycles are telling me now of how this is going to pan out. So it looks to me with a higher probability that we're going to be moving into the midpoint higher than where we are now, maybe 52, 55, 57. And this point here, interestingly, because we've just covered the pi cycle, this point could well be the 63,000 this time around. And that would be before the halving, and then that would be true to the historical perspective of Bitcoin over the last 15 years. And those of you who are interested in following our portfolio as well as the swing trades on the miners section, these are the current trades that we've got going at the moment, which are live. And these started on the 9th of February. So we're only on the 4th day of this trade. And so far, we're in a very good position here at plus 18%, 23%, 15%, and 18%. And you can see all our record previously. So you can see that the last trade that we had back in January, this was our worst trade throughout the whole of 2023 with these figures here. But just a couple of weeks before that, we did have the first part of that trade here where we had a better run at this point. So this was really negated by this loss that we had here. If we have a look at the other trades that we had during 2023, the first round of the swing trades gave us these figures here back in March 2023. Then in July 2023, these were the figures we got. Round 3, we were stopped out over here. And round 4, we got these figures here. So overall, in about 6 or 7 swing trades, we were well up throughout the 2023. And hopefully during 2024, we'll have around about 6 or 7 more trades. So this is our first one. This is actually a modified swing trade that we've got currently. So it's under different conditions to the ones that we've had in the past in order to ride as far as we can during the current rally that we're having. So in terms of the portfolio that we created back in January 2023 here, we ended the year at $434,989 from a starting capital of $110,000. And so far, carrying that forward to 2024, we're now up to $456,737. And that's so far a 5% increase. And that's despite the correction that we've just had of about 45 to 50% with most of the miners. The target for this year is 5 million. And the target here in 2023 was $1 million. So we came just about halfway through there. And this year we've got a second portfolio called the trading portfolio where we actually do swing trades as well as ratio trades. And so far with a series of ratio trades, what we've done is to actually compare the trading portfolio with the passive portfolio. So these are the two portfolios going on. So this is really to show how the swing trades as well as the ratio trades can really impact a passive portfolio. So while the passive one is showing 456,000, our trading one is showing just over $500,000 now at 535,000. So the trading one is up 23% and the passive one is up 5%. And we should, by the end of this bull market, get up to around about the 5 million mark. This is our target. But if we hit 2 million, 3 million, 4 million, I'd be very, very happy with that. So it's a case of aiming for the stars and hitting the moon. And obviously this portfolio is really based on the Bitcoin miners who are a leverage play on the Bitcoin price. Because what we're expecting is a 45x from the start of this portfolio at 100,000. And if you want to join us at the private Bitcoin miners members section, all you have to do is click the join button here. below any of my videos, and for the price of a coffee per week you can have access to all of the portfolio as well as the swing trades and the ratio trades and all the videos that we've done so far. We do 2 videos per week, one on a Wednesday and one on a Friday, and every day I do a market update, sometimes several times a day, in order to keep all the members up to date with exactly what's happening with Bitcoin as well as the Bitcoin miners. So there's a market update every single day whenever there's something important going on. And for those of you who are interested in joining, there is a new members introduction video that shows you exactly what we do with the portfolio as well as the ratio trades and the swing trades, so you can be on the same page with everybody straight away. Okay, so we'll leave it there. Hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video.